RailTel is a PSU that currently works in the telecom industry. Right now, it might look like it's bouncing hard, but if you zoom out, it's not necessarily a clear uptrend. It's a stock trying to recover from two rounds of distribution. Let's start by taking a look at the chart on the monthly basis. RailTel actually had a massive run from around 150 rupees all the way to highs of 611. That entire move was driven by PSU momentum and railway capex optimism. But since then, the structure has been clear. It's been creating lower highs, consistent rejection, and a full markdown phase. Now the price is around 330, and that level is important because this previously was a demand zone before the final rally. Right? Price broke below it, went down all the way to around 245, and then bounced back into it. That move below 245 and sharp recovery, that's a liquidity sweep. But one bounce doesn't mean reversal. Let's move down to the weekly chart. This is where RailTel is actually different. It didn't fall just once. It went through two different distribution cycles. From 600 all the way to 285. Then there's a recovery from 285 to 478, and then another collapse from 478 to 245. That second drop tells you something important. The previous bounce was used by institutions to exit, not accumulate. Now the current move from 245 to 330 looks strong, but technically it's still just a relief rally. Now the daily, this is where the trade really comes in. The move from 245 to 330 happened very fast. Now that creates an imbalance. Now, instead of chasing at 330, the smarter approach is to wait for the price to come back into that zone. Now let's layer in the fundamentals. RailTel isn't necessarily a typical telecom company. It's an infrastructure business built on 67,000 kilometers fiber network running along railway tracks. That's the moat. That is infrastructure that cannot be replicated easily. And since most of it is already built, incremental revenue comes with high operating leverage. Now let's just take a look at that growth, right? Revenue is growing at around 30 to 35%. Margins are stable as well, right? If you just go down to their operating and gross profit, you can take a look, their margins are relatively solid. And the company is actually debt free, so that's a very strong base. But the real driver is the order book. RailTel continues to win government based contracts, railways, ICT projects, police networks, national infrastructure. And that is the reason as to why even their cash flow statement has a lot of cash outflow. It is because of this continuous investment. Now, how would I actually be trading this stock? I would actually be waiting for the price to fall back into the 280 to 295 zone. Okay, and in that case, my entry over here after the pullback into that zone would be 290, and I would buy 100 over here. And my stop loss, in order to create my stop loss and target, what I do is I create one cancel the other, put my stop loss around 225, and my trigger price, that being my target, would be around 485. And that is exactly how I would trade RailTel in the coming few weeks. Thanks a lot for watching.